In this new tax year, a taxpayer is awarded tax credits which reduce the taxpayer's tax due on taxable income in the same way as the taxpayer's primary rebate does. Unlike a few years ago, when a taxpayer was only granted medical tax credits for the number of medical aid fund beneficiaries for whom contributions were paid, all allowable medical aid contributions and allowable out-of-pocket expenses are now also converted to tax credits. No portion of medical aid contributions or out-of-pocket expenses form a deduction from taxable income anymore. Instead, they are converted to tax credits. Converting all medical aid contributions and medical expenses to tax credits sounds as if it could simplify things, but the formulas used in the conversion process can be a bit tricky. Let's go through these tax credit calculations. In the 2016 tax year, the first two primary members of the fund, or beneficiaries as SARS likes to call them, qualify for a tax credit of 270 Rand a month each. Any further beneficiaries qualify for a tax credit of 181 Rand a month each. If you have an employer and medical aid fund contributions appear on your payslip as being paid by you and or by your employer, then your employer may be obliged to use these tax credits to reduce the amount of pay-as-you-earn deducted from your remuneration. The two primary beneficiaries are usually the taxpayer and the spouse, but SARS allows a single-parent taxpayer with children to claim one of the children as a primary beneficiary in addition to the single parent. You may only claim children for whom contributions are paid as beneficiaries. If you are single and add your mother to your medical aid, for example, then you and your mother qualify as primary beneficiaries. The thing to remember here is that you can have two primary beneficiaries, and the second one does not have to be your spouse. In addition to tax credits for the number of beneficiaries, a taxpayer may also be granted tax credits on the assessment for medical aid fund contributions and medical expenses. This applies for taxpayers of all ages. Different formulas are used for the 65 and older taxpayers and for taxpayers not yet 65 or taxpayers with a disability handicap to convert medical contributions and expenses to tax credits. We'll have a look at exactly how these formulas work later in this lecture. Although you can no longer deduct medical contributions or expenses from taxable income on your assessment, tax credits will come straight off the amount of tax you have to pay, just like your primary rebate. And this applies to taxpayers of all ages, even taxpayers 65 or older. It does not matter if the taxpayer pays the contributions or if an employer pays the contributions. As long as the contributions are paid to a medical aid fund, the taxpayer is entitled to medical tax credits for beneficiaries. Taxpayers without an employer would pay their own medical aid fund contributions. Contributions paid by the taxpayer himself are not taxable, cannot be claimed as a deduction from taxable income, but may be converted to medical tax credits, and these medical tax credits may reduce the tax due on the taxable income. What are the tax implications if your employer pays contributions to your medical aid fund? Well, the Code 4474 contributions shown on the IRP5 paid by your employer are seen as a fringe benefit and are taxable in your hands at salary source even if you are 65 or older. Although only the employer's contributions are added to taxable income for tax, both the contributions paid by the employer and the contributions paid by the employee may qualify to be converted to tax credits, and these tax credits reduce the tax you have to pay. If you come across a case where any contributions are paid by a pension scheme to a pensioner taxpayer's medical aid under Code 4493 on an IRP5, then these contributions have no taxable element to them. There is also no Code 4474 or Code 3810 amount allowed on an IRP5 with the Code 4493 amount. These Code 4493 contributions are not converted to tax credits, but any contributions paid by the taxpayer himself may be converted to tax credits. If a taxpayer does not have a medical aid fund, then the taxpayer does not qualify for tax credits for beneficiaries, but the taxpayer's other allowable medical costs and expenses may be converted to tax credits on the assessment. When I use the word may, I mean that the terms and conditions in SARS's conversion formulas may allow certain medical costs and expenses to be converted to tax credits. We'll go through this in detail later in this lecture. Let's talk about an employed taxpayer who receives an IRP-5 indicating medical aid fund contribution codes. It is important that we understand what these codes mean, and since there are only 3 codes we need to worry about, this is a lot easier than you may think. A Code 4474 amount on the IRP-5 indicates an amount of medical aid fund contributions paid by the employer in respect of the employee. The thing to remember here is that this amount paid by the employer to the employee's medical fund is fully taxable in the hands of the employee, in the same way as normal fringe benefit is taxable. And this counts for taxpayers of any age. Code 3810 on the IRP-5 is used to show the taxable element attached to the Code 4474 amount paid by the employer, and because the whole Code 4474 amount paid by the employer is taxable, then obviously the Code 3810 amount will be the same as the Code 4474 amount. Note that any portion of contributions paid by the employee himself are not taxable, but may qualify to be converted to tax credits. For taxpayers of all ages, the Code 3810 amount is added to other income amounts on the IRP-5, such as salary, etc., to form part of the taxpayer's total income for tax on the IRP-5. Code 4005 on the IRP-5 is the Code 3810 amount plus any portion of the contributions paid by the employee at salary source. This means that in a case where the employer pays all the medical aid fund contributions, then the Code 4474 amount, the Code 3810 amount, and the Code 4005 amount will all be the same value. To illustrate what we've just said, let's have a look at the income screen in WinTax 2016 showing a typical IRP-5 layout. In our first example, we can see the IRP-5 screen in WinTax 2016 showing a sample IRP-5 from an employer. We can see a column headed as income received, and we can see a column headed as deductions contributions. The amounts in this deductions contributions column are not actual deductions. These codes, such as 4474 and 4005, should be treated as information codes, and these amounts are merely amounts that could go towards making up deductions or tax credits. The total of $120,000 in the yellow field at the bottom of the deduction contributions column is not the total of deductions or contributions allowed. It is merely the total of amounts entered in this column which could affect the deductions or tax credits depending on legislative limits. In this particular case, the employer paid all the contributions of 60,000 Rand for the year, and the employee paid none. We can see the 60,000 Rand amount of the medical aid contributions paid by the employer in respect of the employee as Code 4474. You should treat Code 4474 as an information code, merely showing the amount of the contributions paid by the employer. In actual fact, the whole of the 60,000 Rand amount paid by the employer is taxable in the hands of the employee, and it is shown as Code 3810 under the income received column. It is treated and taxed just like any other fringe benefit. Remember this. Code 3810 is the taxable element of the employer's Code 4474 contributions paid. Since all of the employer's Code 4474 contributions are taxable, the Code 3810 amount will be the same amount as the Code 4474 amount. We can see the Code 3810 amount of 60,000 Rand is added to the salary of 300,000 Rand to make a total income for tax of 360,000 Rand, shown as Code 3698 and 3699 total income. This Code 3810 amount is taxable in the hands of employees of any age, including employees who are 65 or older in the 2016 tax year. Although the employer's contributions are taxable in the hands of the employee, no portion of the contributions may be claimed as a deduction in this tax year. Instead, contributions are now converted to tax credits, and we will see how that works shortly. One more code we need to look at is Code 4005. How Code 4005 amounts are made up is very important, yet many practitioners still get this wrong. Code 4005 is made up of the Code 3810 taxable contribution share paid by the employer plus any share of the contributions paid by the employee on the IRP5. In this case, we can see that the employer paid all the contributions of 60,000 Rand. So Code 3810 is 60,000 and Code 4005 is 60,000 Rand. In this case, Code 3810 equals 60,000 and there are 0 contributions paid by the employee, so Code 4005 equals the Code 3810 amount of 60,000 plus 0. If the employer and the employee were involved in a 50-50 split with regard to contributions, then our IRP5 may look like this. In our second example, we can see that the employer and the employee split the total contributions of 60,000 Rand 50-50. In other words, they each paid 30,000 Rand. The employer's 30,000 is taxable in the hands of the employee, so the codes 4474 and 3810 are 30,000 Rand. The code 3810 amount of 30,000 Rand is added to the salary to make total income for tax of 330,000, and this is the same for taxpayers less than 65 years of age and for taxpayers 65 and older. The code 4005 amount is 60,000 Rand and made up of the code 3810 amount of 30,000 Rand plus the 30,000 Rand share of the contributions paid by the employee. The contributions paid by the employee are not taxable and are not included in any code 3810 amount. In a case where the employee paid all the contributions through a stop order on his salary, for example, then the IRP5 would look like this. In our third example, we can see that the employer paid no share of the contributions, so there is no code 4474 amount on the IRP5 and no code 3810 amount added to income. Code 4005 is the code 3810 amount plus the share of contributions paid by the employee. Code 3810 amount is obviously 0 in this case, so 0 plus 60,000 Rand paid by the employee equals a code 4005 amount of 60,000 Rand. Before we look at how the contributions and beneficiaries are converted to tax credits, let's have a look at the deduction screen where we enter allowable out-of-pocket medical expenses not reimbursed by our medical aid or anyone else. In the WinTax software program, this is where we enter our claims for out-of-pocket medical expenses under code 4020, 4022, or code 4023. This is the deductions and claims screen in the Wintex program, which we will use to explain medical claims. When it comes to medical, we have different types of potential claims that may possibly be converted to tax credits. All sorts of terms and conditions apply to each of these types of claims. Firstly, any allowable out-of-pocket medical expenses we incurred that were not reimbursed by our medical aid, our employer, or by anybody else may be converted to tax credits. By allowable, I mean that these expenses must be payments made to registered doctors, nursing staff, hospitals, clinics, etc. for genuine medical services or treatments, or to chemists for prescription medicines. You may enter a total of these expenses right here, or you may take advantage of the itemizing grids in the software to enter a list of your expenses in a grid, which is ideal for printing a schedule of the expenses. Now if I click on the itemized button, it'll open this grid, and we can enter as many itemized medical accounts as we like in this grid. We've only entered 3 here, but we can put in 300 if we like. If I then click on the OK button at the bottom, then the amounts in the amount column of 3,000, 6,000 and 1,000 will be added together, and the total will be put in the total column under code 4020. A formula will convert the allowable out-of-pocket expenses to tax credits. We'll go into these conversion formulas in more detail later, but first let's talk about the difference between claiming out-of-pocket expenses under code 4020, 4022 or code 4023. Code 4020 is where you claim all normal, allowable, out-of-pocket medical expenses for you and your dependent family. As mentioned before, these have to be expenses for genuine medical services or prescription medicines. The types of medical goods or services is limited. Allowable claims will be converted to tax credits in 2016. Code 4022 is where the taxpayer or a dependent family member with a physical impairment claims allowable out-of-pocket medical expenses. The difference here is that there's a wider range of allowable goods and services permitted as a claim under code 4022. For example, if an accident left you with a severe limp and you need special physio or special equipment that may not be allowed under code 4020, then you claim your expenses under code 4022. Formulas are used to convert these allowable claims to tax credits in 2016, and we'll shortly see how these formulas work. Code 4023 is where you claim out-of-pocket medical expenses if the taxpayer or a dependent has a serious mental or physical disability handicap problem, such as being confined to a wheelchair, etc. Your allowable out-of-pocket medical expenses will be converted to tax credits if you select that someone in your family has such a handicap disability, or if you claim your expenses under code 4023. SARS will require that you get an ITR-DD form completed by a physician, so keep a copy of the form with all your medical receipts. Allowable claims will be converted to tax credits. Taxpayers less than 65 with a dependent with a disability handicap will be treated the same as taxpayers 65 or older as far as converting medical contributions and expenses to tax credits is concerned. Note that in all our examples we will use 10,000 Rand allowable code 4020 out-of-pocket expenses. Let's have a look at the screen where we claim medical tax credits, and to do that we need to click on this button here. This is the screen where we will see exactly how tax credits are granted for beneficiaries, and also how contributions and medical expenses are converted to tax credits. Let's have a closer look at the top part of this screen. The top half of this screen with a green background looks pretty much the same as this part of the ITR 12 form on e-filing. Remember that tax credits apply to taxpayers of all ages, including taxpayers 65 or older. This particular taxpayer had 2 beneficiaries for each of the 12 months of the 2016 tax year. And we can see the total tax credits for beneficiaries for the tax year of assessment as being 6,480 Rand. This amount of 6,480 Rand will be added to any other medical tax credits which may be allowed, and the total of all tax credits allowed will come off the tax you have to pay, in much the same way as your primary rebate reduces your tax commitment. Note that tax credits are not a deduction against taxable income. Tax credits come straight off the tax you have to pay, and this applies to taxpayers of all ages in the 2016 tax year. Remember that tax credits are non-refundable, which means tax credits can be used to reduce the tax you have to pay, but tax credits cannot push your tax commitment into a refund situation. It makes no difference if the employer or the employee pays medical aid fund contributions. The taxpayer still gets tax credits for beneficiaries and for allowable contributions. Taking a closer look at the bottom half of this screen. In case you get a bit confused working through SARS's formulas for converting allowable contributions and expenses to tax credits, you can always click on the Tax Tip Info button to refer to exactly how the calculations work. If we click on this info button down here, then this tax tip screen will appear, showing us in detail the formulas used for converting medical expenses into tax credits. Let's close the screen. These are the amounts we used in our first example, where the employer paid all the medical aid contributions of 60,000 Rand for the year in respect of the employee. The 60,000 Rand contributions paid by the employer as code 4474 is shown here, as well as the total contributions as code 4005. The employer paid all the contributions of 60,000 and the employee paid none in this year, remember? So we have total contributions of 60,000 Rand. Although it is true that taxpayers of all ages may qualify for tax credits for contributions and out-of-pocket expenses, there are different formulas used for less than 65s and for 65 and older to convert these allowable contribution and allowable out-of-pocket expense amounts to tax credit. Please don't forget that the taxpayer we are dealing with here in this example is not yet 65. So let's see what happens now. Looking at the yellow column a bit further down the screen, we can see that the tax credits of 6,480 Rand granted for beneficiaries, and we can see the amounts granted as tax credits for the allowable contributions, such as the 60,000 Rand contributions, less 4 times the tax credits for beneficiaries. 4 times 6,480 is 25,920. So 60,000 less 25,920 is 34,080 Rand. To this amount of 34,080 Rand, we add the 10,000 Rand allowable out-of-pocket expenses, and we get 44,080 Rand. This is the important bit. 25% of any part of this amount of 44,080, which exceeds 7.5% of taxable income, will be converted to tax credits. Remember, we have not entered any deductions, so our taxable income is the 300,000 Rand salary we entered plus the 60,000 Rand taxable medical aid contributions paid by the employer. This makes a taxable income of 360,000, and 7.5% of 360,000 is 27,000 Rand. Now, 44,080 exceeds the taxable income of 27,000 Rand by 17,080, and 25% of 17,080 is 4,270. For this not yet 65 years old taxpayer, the total medical tax credits are the 6,480 tax credits for beneficiaries plus the 4,270 amount, which means the total tax credits of 10,750 Rand. In fact, if I drag the auto summary screen over this window, we can see there's our total income for tax, 360,000 Rand. There's our taxable income, 360,000 Rand. According to the tables, the tax on that is 82,843 Rand. Now, if we subtract from that 82,843, if we subtract our primary rebate plus our medical tax credits, it reduces our tax from 82,843 down to 58,836 Rand. You can see that medical tax credits are treated the same as the primary rebate. They're all deducted from the tax due on the taxable income. Let's get rid of this. Let's have a look at our second example, where the employer and the employee each paid half of the 60,000 Rand total medical aid fund contributions. Remember, the IRP5 shows that the code 4474 amount of contributions paid by the employer was 30,000 Rand, and the 30,000 Rand is taxable as code 3810 and added to 300,000 Rand salary to make a total of 330,000 Rand for income. Note that as we don't have any deductions, our taxable income will also be 330,000 Rand. Code 4005 is the code 3810 amount of 30,000 plus the 30,000 Rand share of contributions paid by the taxpayer. Remember, the taxpayer's 30,000 Rand share of contributions is not taxable. Now let's have a look at the screen where we show how these amounts are converted to tax credits. Remember, we're also claiming 10,000 Rand out-of-pocket expenses in all our examples. Everything is the same here with regard to tax credits for beneficiaries, and we have the same total of 60,000 Rand contributions. Remember, half paid by the employer and half paid by the employee. Once again, our formula goes like this. 4 times the beneficiary tax credits is 4 times 6,480, which is 25,920. Qualifying contributions of 60,000 Rand less 25,920 is 34,080 Rand, plus 10,000 Rand out-of-pocket expenses is 44,080 Rand. Now remember, our taxable income in this case is 330,000, and 7.5% of taxable income is 24,750. Now, the 44,080 exceeds this 24,750 by 19,330, and 25% of the 19,330 is 4,833 Rand. So our additional tax credits are 4,833 Rand. Our total tax credits are 6,480 for the beneficiaries, plus 4,833 additional tax credits, which equals 11,312 Rand. Looking at the auto summary, here in the auto summary we can see a taxable income of 330,000 Rand, and there's the tax according to the tables. On the 330,000, it's 73,543 Rand tax due on the taxable income of 330,000 Rand. There's our rebates. Subtract the rebates from the amount of tax due on the taxable income. Also, subtract the tax credits for the medical tax credits, and it will reduce our tax from 73,543 643 down to 48,974 Rand. Let's get rid of the auto summary. Now let's have a look at our third example where the employer paid no share of the contributions on the IRP5 and the employee paid all the contributions of 60,000 Rand. Now looking at the IRP5 for this one, here we can see the only medical code is code 4005, showing the 60,000 Rand medical aid contributions paid by the employee. The employer paid no contributions, so there's no code 4474 amount and no code 3810 amount added to income for tax. Having a look at the screen showing the conversion to tax credits, once again our tax credits for two beneficiaries is the same at 6,480 Rand. 60,000 Rand contributions less 4 times the beneficiary tax credits of 6,480 is 60,000 Rand less 25,920, which is 34,080 Rand. Add the 10,000 Rand out-of-pocket expenses and we get 44,080 Rand. Now the taxable income in this case is 300,000. And 7.5% of 300,000 is 22,500. The portion of 44,080, which exceeds 22,500, is 21,580 Rand. And 25% of 21,580 Rand is 5,395 Rand additional tax credits. Our total tax credits are 6,480 plus 5,395, which is 11,875 Rand. Now let's go back to our original example where the taxpayer paid all the contributions of 60,000 Rand in respect of the taxpayer. Now we're looking at the same figures, but this time for a taxpayer older than 65. We can see that absolutely nothing changes on the IRP5. Even for older taxpayers, the employer's contribution of 60,000 Rand are still added to the salary to make total income for tax of 360,000 Rand. Let's go to the screen in WinTax, which shows the conversion of contributions and out-of-pocket expenses to tax credits. We can immediately see that for a taxpayer of 65 or older, tax credits are granted for medical aid fund beneficiaries in 2016. We also have a different set of formulas giving us different tax credits for allowable contributions and for allowable out-of-pocket expenses. The tax credits for contributions are worked out as follows. 33.3% of contributions less 3 times the beneficiary tax credits. Note that it's 33.3% and not 1/3. There's a big difference. Now 3 times 6480 is 19440. 60,000 minus 19440 equals 40,560 Rand. 33.3% of 40,560 Rand is 13,506 Rand. So our tax credit for contributions is 13,506 Rand. The tax credit granted for allowable out-of-pocket expenses is 33% of the expenses. In this case, 33.3% of 10,000 Rand, which is 3,330 Rand. If you add up the 3 different tax credits granted, we get total tax credits of 23,316 Rand. Looking at the auto summary, there we can see the taxable income of 360,000 Rand, and according to the tax tables, the tax on that is 82,843 Rand. Now, the primary rebate of $20,664 for somebody 65 and older, if you subtract that away from the tax due on the taxable income, and you subtract the $23,316 for your tax credits, if you subtract those two away from your $82,843, it reduces the tax due to 38,863 Rand. Looking at a completely different example, where the taxpayer not yet 65 was not employed and lived off interest from investments or maybe income from private business like property rentals, etc. Let's say the taxable income from property rentals here was 300,000 Rand. If this unemployed taxpayer paid his medical aid contributions of 60,000 Rand for the year himself, then we enter them here under code 4040. Remember, this taxpayer had no employer. He generated his own income. Code 4040 is where you enter medical aid fund contributions paid that do not appear on an IRP5, such as our case here where the taxpayer was not employed. If this taxpayer also spent 10,000 Rand on allowable medical expenses, then we can see that the amounts converted to tax credits are exactly the same as the earlier example where the employed taxpayer paid all the contributions himself under code 4005 on the IRP5. If you come across a certificate from a medical aid fund which says that the fund received 70,000 Rand in contributions and the IRP5 indicates that only 60,000 Rand in contributions were paid to the fund, then the other 10,000 Rand came from somewhere, and if you look for it, you'll find it. It probably came from the taxpayer's bank account, in which case you can claim the 10,000 Rand here under code 4040. Often, with something like medical aid fund contributions and tax credits, the best way to understand how things work is to understand what happens at salary source. Once again, probably the best way to illustrate how this all works at salary source is to use the EMP10 section in the Wintax 2016 software to see what happens on a monthly payslip and on an IRP5. Looking at the monthly tax situation for this taxpayer, age 33, we can see that the taxpayer's monthly salary was 25,000 Rand and the employer paid all the medical aid fund contributions of 5,000 Rand for the month. This 5,000 Rand is taxable in the hands of the employee, so the employer would add the 5,000 Rand to the 25,000 Rand salary and he would tax the employee on 30,000 Rand. The tax on the monthly income of 30,000 is 5,798 Rand and 83 cents, and the tax credits for the two medical aid fund beneficiaries is 540 Rand. The net tax will be 5,258 Rand and 83 cents. Note that the employer may not use additional tax credits for contributions at salary source for a taxpayer less than 65, as these calculations involve the taxable income which is unknown at salary source. Note that the UIF amounts are calculated using figures for March 2015. What if we change the medical aid contributions as being shared 50-50 by the employer and the employee? With the employer and employee paying 2,500 a month each, the employer will tax the employee on 27,500, as only the employer's 2,500 is taxable and not the employee's 2,500. The tax on 27,500 is 5,023 Rand and 83 cents, and the tax credits of 540 Rand reduced that to 4,483 Rand and 83 cents. What if the employee paid all the contributions himself from a stop order on his salary? The 5,000 Rand paid by the employee is not taxable, so the tax on 25,000 Rand is 4,248 Rand and 83 cents, and the tax credits of 540 Rand reduce this to 3,708 Rand and 83 cents. Note that the employer is obliged to grant the employee tax credits at salary source for contributions paid by the employee. What if the employee is over 65 and the employer pays all the contributions? We can see that the employer's contributions are added to salary and a total of 30,000 Rand is taxed. The tax on 30,000 Rand will be 5,181 Rand and 58 cents. Remember, the tax liability amount shown here in this calculator is after the primary rebate. The tax credits for beneficiaries is the same at 540 Rand, but the employer is allowed to calculate tax credits for 65 years and older employees, as the formula does not use the taxable income. These tax credits amount to 33.3% of contributions, less 3 times the beneficiary tax credits. This means 33.3% of 5,000 Rand contributions, less 3 times 540 beneficiary tax credits. 5,000 Rand less 1,620 equals 3,380 Rand, and 33.3% of 3,380 Rand is 1,125 Rand and 54 cents. Here is an IRP5 for the year using our example where the employee, not yet 65, earned 300,000 and the employer paid all the medical aid contributions of 60,000 Rand for the year in respect of the employee. The 60,000 Rand contributions paid by the employer are taxable and added to the salary to make up income for tax of 360,000 Rand. The tax on 360,000 Rand is 69,586 Rand, and the annual tax credits of 6,480 Rand for 2 beneficiaries reduce this tax amount to 63,106 Rand.